What's up, guys? It's your boy, the Alligator. You know the name of the game. We've been bringing you stocks for over a month now, live from the quarantine, from this coronavirus crisis. So it's time to do some accounting and see how these stocks are doing. So we're going to start with Carnival Cruise Corporation, ticker symbol CCL, based in Miami, Florida. We brought it to you on the 1st of April when it was trading at $8.80. Now, we gave you an update a few days later on the 6th of April when it was trading at $10.21. That means you made 16% of your money. Now, if you didn't sell back then at a 16% gain, that's okay, because on April 29th, it went up to $16.70 for 89.7% return on your money, almost 90%. Now, obviously, logic tells you that you should have sold that stock back then at 90% of your money. Keep in mind that there's strong rumors that interest rates might go down to zero, so a 90% return on your money in a few weeks is pretty good. But if you didn't, that's okay, because today it's trading at $14.21, which is still 61% gain on your money. So is it still a keeper? Yes, there's still room for improvement and for growth on this stock. Huge news a few weeks ago, the Saudis invested $700 million or 8% stake in this company. And now we know that the Norwegian Sovereign Wealth Fund is invested in this company as well for an undisclosed amount. And this fund manages $1 trillion. It's the biggest sovereign fund in the world. So CCL, still a good investment. Now on the 17th of April, we were feeling kind of iffy about the market. We weren't really sure what was going on. There was a lot of bad news going on. We had a bad feeling about oil, unemployment, terrible economic numbers. So we told you to play it safe. So we brought to you ATVI, Activision Blizzard, which is a video game company. On the 17th of April, it was trading at $66.23. Today, it is trading at $73.14. So you made 10% of your money. Compared to the other ones, it's not very volatile, but it's a very safe stock, a strong company. Had an amazing quarterly report last week. Does it have room for growth? Activision Blizzard, definitely. I think it's a $90 stock. When? I have no idea, but it's definitely a keeper. I'm keeping that stock. We also brought you Glaxo Smith Kline, which is one of the biggest pharmaceuticals in the world. Back then, it was on the 17th of April, it was trading at $41.71. Today, it's $41.91. So not big of a difference. It's a very steady stock. It's a blue chip. Is it a keeper? Yes, it's not very volatile, and your money is pretty much safe in a company like this. Now, another company we brought to your attention was Apache Corporation, which is an oil and gas company based out of Houston, Texas. We brought it to you on the 6th of April when it was trading at $5.20. Then we brought you an update 4 days later on the 10th of April when it was trading at $9.13. That means that you made 75.5% of your money in those 4 days. Now, if you didn't sell back then, that's okay, because on April 30th, a few weeks later, it hit $13.40 for 157% of your money. Now, if you didn't sell back then, you're a bit greedy, but I understand, that's okay. Today it's trading at $12.45 for 139% return on your money if you bought this stock when we brought it to you on the 6th of April. Now, does it have room for growth? Yes. Remember, oil is going up. It will no longer go back to negative numbers. The world is opening up. There's more demand for oil and gas, and there's less production because of the OPEC agreement with the Saudis and the Russians, and there's also some organic cuts in production, which means that some companies just stop pumping oil because it wasn't profitable at these low prices. So we expect oil to range between $30 to $35 in the next few months. So Apache, you should start selling Apache at around $15.50. That's just my personal opinion. And last but not least, on the 29th of March, we made an episode on oil tanker companies. We brought you two companies, DHT and INSW, because oil tanker companies were making so much money when the Saudis flooded the world with cheap oil. Obviously, their services were highly required, so we brought you these stocks. Now, on the 29th of March, DHT was trading at $7.21. We brought you an, oh, by the way, we also told you on that episode that there was a perfect inverse relationship between the price of oil and the price of tankers. When oil goes down, tankers go up. So March 29th, DHT was trading at $7.21. On the 20th of April, when oil went into negative territory, we brought you an update on these stocks and how much percentage gains they made on that day. And DHT peaked 2 days later on April 22nd. It was at $8.64. So if you sold then, you made almost 20% of your money. Today, unfortunately, it's trading at $6.72. You are at a loss of 6.7% if you still hold this stock. INSW, on March 29, it was trading at $22.84. It reached its peak on April 28th at $29.21. That's a 27% gain from when we brought you the stock. If you still hold it, unfortunately, today is now trading at $21.82. You are at a 4.46 loss. Oil tankers, ironically, they had amazing quarterly reports last week, but their 15 minutes of fame was overshadowed by the rise in prices of oil. Oil went from negative territory. Now it's between $25 to $30 per barrel. So, these stocks became not interesting, not cool in the oil and energy world. So personally, I'm out. Some people might want to hold these stocks. They are making money. They're very solid companies, but, I'm out. There's much better play, in my opinion. Again, this is your boy, the Alligator. You know the name of the game. We will keep you updated. We will keep you with more updates regarding how these stocks are moving soon, okay? Take it easy, guys.